Good afternoon, everyone, and thank you for joining the SheTrades Invest webinar series. Specifically today, we will be having coffee with Opportunity Bank Uganda. I just would like to go through some house rules before I begin. First, please make sure that your mic is on mute and that your camera is off. In addition to that, if you have any questions, please do use the chat box and we'll be answering this at the end of the webinar. You will be having about 15 minutes for questions and answers. So again, if you do want to use the chat box, please feel free to use it. Also, at the end of the webinar, we'll be having a poll, so a polling system, so you can also answer yes, no questions. I think, if I'm not mistaken, it's about 3 questions, just for us to know what you felt about the webinar. At the end of this webinar, you'll also be receiving an email with the evaluation, just to let us know what we can improve for the next webinars. Lastly, this webinar will be recorded and will be shared with you. It will be shared with you, and it will also be available on shetrades.com. With that said, my name is Leticia Johnson. I'm a project coordinator for SheTrades Invest and also for other projects under the initiative. I also work very closely to Marco Letti. Marco, would you like to introduce yourself?
Can you hear me?
Yes, perfect.
Okay. Hi, everyone. My name is Marco. I work with Leticia on SheTrades Invest, and I also work on all the main ITC projects related to access to finance and investments across all developing countries. So welcome today.
Thank you, Marco. In addition to Marco, we have our project and partnership manager, which is Anna Mori, and also Nina Jason, who is our communications expert, and they're all here with us today. Today, Mr. Amos, let me just go to the next slide. Mr. Amos Bona will be speaking on behalf of the Opportunity Bank Uganda. Mr. Amos, would you like to introduce yourself and Opportunity Bank, and you can proceed with the presentation. Thank you.
Thank you very much, and a very good afternoon to everyone. The moderators and the participants, all protocol observed. My name is Amos Bona. I head credit in Opportunity Bank, but with 16 years banking experience, but with a bias in microfinance. Opportunity Bank have served 6 years, and so I'm delighted to do a presentation on a small profile of the bank and what we can offer. And at the end of the day, I would want to unlock the business opportunities to the SheTrades entrepreneurs out there, and to welcome any that would like us to start that journey. And next slide.
I've made you the co-host. Just let me know if you can change the slides.
No, I can't.
No. Okay, in this case, you can let me know and I will change it for you.
Okay, next. Opportunity Bank is a commercial bank of the 25 commercial banks in Uganda. But our journey starts 25 years ago as a microcredit program under Food for the Hungry International. Down the years, we were acquired by Faulu, then Opportunity International. They became a Tier 2, which is a credit institution. A credit institution mainly does credit and less of the deposits, and is governed still under the regulations of Bank of Uganda until last year in September when we acquired the Tier 1. So with the Tier 1 status, that means more opportunities, better service, and the better offers that we want to give to you, our entrepreneurs. Next slide, please. The bank's mission, with outreach of 23 branches spread out in all regions of the country, but most of them in the central region, but with a bias of agriculture, education, the youth and women, has a mission of offering innovative technology-led financial solutions. But don't just offer loans and banking services, but we also train. Our purpose is to transform our lives of people out there. And our vision is to be a bank of choice for those who aspire for a life of dignity and purpose. So from the product range, we do have loans, we do bank assurance, deposits. Ideal as a bank, that would be the first item, deposits. We do money remittances and channels. Now the bank structure is all our customers, right now over 30,000 customers, are segmented into predominantly 4 segments. We have the microfinance, small segment, the medium, large, and the retail categories. And under bank assurance, we are regulated by the Insurance Regulatory Authority of Uganda. So the next time any of you has insurance demands, please, you can walk into any of our branches and we'll serve you just like an insurance company would do. Because we're a broker, we're licensed to do credit life, life insurance, and the general. Under the savings, which is our flagship, we do have a bouquet of deposit products ranging from ordinary savings to fixed accounts. Now, if you have any target, we'll do for a target. If you have a circle, you are in a company, we do have all that lined up for you. But if we also take pride in our children, and so we have a child saving account, that all these come up with an insurance package called Opportunity Legacy, that in the unlikely event that the customer passes on with an account with Opportunity Bank, we do get the amount that was on the account for the last quarter. We'll multiply that by 10 times the figure, and that amount is given to the beneficiaries of the account holder. This is one of the few offers you'll find on the market, and it's been one of our cash points. Under remittances, we do express money, MoneyGram, more or less like the other banks, and Forex. And most of our services are rendered through channels, over the counter, through the branch network. But most importantly, looking at COVID and the impact it's had on the economy and the world, we've digitized a lot of our processes. And so cell phone banking, we see many transactions increasing there, ATMs, and the most recent is the agency banking. So with all these product offerings, surely we're a partner that we will be ready to serve any of you that are ready to join the bank. But my presentation today is going to majorly surround the loans. So I'm going to go deeper into the lending, and hopefully I can achieve your expectations. So like I did mention, all our category of lending is under segments. So the first one being the group loans, that's the microfinance. This sits on 3 pillars of trust, peer pressure, and self-service. So meaning you can form a group of women, and this being our bedrock, it's more or less a nursery for people who have not had that wide experience in banking but would want to start. They are more or less seen, they're unbanked. We start them under the microfinance. We do lending, but with a very strong bias in financial literacy and the training program that will make sure that the customer does not only take a loan, but gets personal financial management skills, how to market their products, how to service their loans. And as the years go by, we then see this category of customers graduating from the micro space into the second layer, which is the small category. Then you detach from the groups and you become an individual coming to the bank. Now, depending on the capital structure and the assets you have plus the income, then it becomes an issue of, is it a small loan or a medium loan or a large loan? So the two definite segments of medium and large plus small will almost have the same characteristics. Then we have retail, which only looks at people that have salaries, and the salary is going to be the domicile, the collateral, and the source of payment. So nothing much about financial literacy because you're a teacher somewhere, you only want a loan. We have that package under the retail segment. Now, if you are in an economic activity that is one of the listed on this, on my number 2, then you are definitely the type of person that the bank is going to look out for, and will have a product that is tailored for your specific activity, ranging from agriculture to education to real estate up to the personal loans. Slipping through, we have products, specific products under each segment. So if you're a smallholder farmer in a village way up in the north and you formed a group, you'd fall under the microfinance segment, but agriculture as a trust group. If you're then in small, we do the same. The reason why we lump up all these with similar characteristics is to market to them, to sell to them much better, to offer better products in the bouquet in which you belong, as opposed to lumping up the microfinance with the SMEs. When it comes to assessment, as my presentation will show, the degree of assessment on those different ranks depends and it keeps varying. It's more lean and simple when you're taking the micro loans, but as you graduate up to the large exposures, then the analysis and appraisal plus the requirements will become a little complex because of regulation and the risk that is attached to such segments. Next slide, please. So for you, the customer, mainly the needs that are going to come through will literally fall under structured loans, where we have both unsecured and secured loans, ranging from 3 months to 5 years. We do have short-term and the ordinary overdrafts, also unsecured and secured. We offer revolving facilities. A revolving facility is a limit that we give you, but we know, as opposed to you coming to the bank all the time, you know you have a business of contracting, but these contract terms, they normally pay after 60 days. But you know you'll want the money for 1 year. But as opposed to coming every after 60 days, we set for you a limit for 12 months, but pay after every 2 months. So we secure one approval, then every 2 months, you keep taking the facility. So in essence, when you take advantage of the revolving facility, you're able to multiply that facility 6 times within the year. And that in itself has a very great advantage it brings to you in line with the liquidity and management of your cash flows. Related to the revolving loan, we can set for you a line of credit where you have multiple layers of different types of facilities right to one customer. You have a structured loan, then you have an overdraft, and you have a guarantee, all lumped up to the same customer, but the line of credit was set for you with the terms that are determined at the inception. So you have the leeway of playing around the different facilities that you'd want to. And for entrepreneurs, especially those in export and the e-commerce plus agriculture, not leaving the other sectors, this would be a very good positioning for yourselves. And I do encourage that if we do have an opportunity of discussing further, we can explore in one of the 2 items that we can offer. We do offer, sometimes entrepreneurs get stuck. You've taken a facility of say $10,000, you've paid up to $7,000, then you have an urgent need of $2,000. Many times you're forced to go back to the bank and they're going to ask for all that hectic paperwork that had been used for the $10,000 US. So what we did, we came up with a loan top-up facility where in that scenario I've shared, Once you apply, you say, I want a top-up facility of say 3-4 months, not exceeding 12 months. So we sit on the existing facility. If the gap was 3,000, we simply top up the 3,000 so that the original capital goes back to 10,000. And in a matter of about 2 hours, you have your money in your bank account. Now, this helps manage liquidity, and it's something many customers don't take advantage of, but the bank does offer. And finally, from the offering, we do trade finance, where we offer invoice discounting and the guarantees. Specifically, we do bid guarantees, performance guarantees, advance payments, and the retention guarantees. When it comes to the structuring of all these facilities, the one item that has kept us running for the last 25 years has been right structuring. Under correct structuring is where we look at the cash flows. So typically, let me look at a poultry farmer who has birds, a day-old birds that have been introduced to the farm, but these birds are going to start laying on the 5th to 6th month. Many times when they go to banks, they're going to be given repayments of monthly. But what we do here is we look at your cash flows. We look at the actual time when the cash flows are coming through. So for that poultry project, once we release the money for acquiring the birds plus the feeds, your first payment should come not less than 6 or 8 months. So these 6 months give you some time to go and stabilize the business so that when the business has picked off, you can start paying through. So our payments, right from the microfinance to the large loans, will depend on your cash flows, but we spread it in frequencies of weekly, monthly, quarterly, that's 4 times a year, termly, that's 3 times a year, or twice a year. There are some customers who will come and say my cash flows, because I'm in the rice production and we have one season in the eastern part of the country, I only want to pay interest payments, but one principal payment at the end of the year. That we can also accommodate by offering grace periods that will suit the business needs. The structuring type that we do offer, we can do a stagger. Under staggering, what we look out for is we sit down with the proprietor, with the entrepreneur, and we agree with you, because you know your business is much better and the different patterns of trade. As opposed to having an equal monthly installment, you could say for the $10,000 that you're giving me, I would like to pay $500 in month 1, then $1,000 in month 2, $3,000 in month 3. That is an item we can do, stagger that facility to suit your business needs. A balloon is a bullet payment that is paid at the end of the maturity of the facility. Then we also have the equal monthly, quarterly, termly installments. The pricing considerations, and this is the most important bit for entrepreneurs, at what price am I going to get any facility with the bank? We do have 2 types of pricing. One is on declining balance. And by the way, our pricing ranges from 1% per month to 3% per month, depending on the type of facility and the risk that has been looked at. However, for the SheTrades team, specifically because of the discussions we've had and the opportunities we have with ITC SheTrades, we do have an offer, a discounted offer of between 1% to a maximum of 2% per month, which will be under reducing balance. However, for customers who normally come for the microfinance loans, because these are very short-term loans that run from 3 months to a maximum of 12 months, what we do, we set them up under a flat rate, which also runs the same between 1% to 2% for this very specific project under SheTrades. So to differentiate these two, I would like to, in a second, to give a demonstration. If you had a loan of 1 million Uganda shillings payable in 12 months under reducing balance at 10%, At the end of the year, you'd pay 55,000. That means every month you'd be required to pay 88,000 shillings under reducing balance. But if it's under the flat rate, the 1 million shillings, 10% for 12 months, you would be paying an installment of 92,000 from 82,000. And at the end of the year, you'd pay 100,000 because it's 10% of the capital. So it's key for an entrepreneur to know any bank out there, any financial, what kind of interest computation are you going to levy on my facility? Is it declining balance, which always has an advantage, or is it flat? For the loan tenure, like I did mention before, we have a flexible tenure system that runs from 3 months loans up to a maximum of 5 years. So quite flexible with the offer that we can give to the entrepreneur. So having shared what the bank is willing to give and what we offer, what do you need as an entrepreneur? Do you think you have what it takes to access a facility? That brings me to the requirements for any credit facility, but specifically to Opportunity Bank. We have, as a regulated institution, and we have to be law abiding. We have legality and regulation matters that must be strictly adhered to. And one of them is the type of businesses we lend to. So the bank lends to limited liability companies, limited by guarantee, partnerships, sole proprietorships, cooperatives. We have NGOs and CBOs. We do SACCOs, refugees, and the local government from the legal status. So each of these has a dynamics and the documentation that shall be required from you, the proprietor. But many times we sit down with the customer and we do help them go through all the paperwork. For instance, if you came with a company, we would expect the memorandum and articles of association, spelling out very clearly in the objectives the purpose for which you're going to borrow. Many times entrepreneurs have lawyers who are going to draft for you company documentation, but because you're busy, you don't take time to read through what you're going to have. So you find your objectives clause mentioning you're going to be in agriculture. However, when you come to the bank, you front a school, you front an activity that is way outside the scope of your registration. That will cause you issues, and I don't think any bank will be willing to fund, but most importantly, there will be need to amend such memorandums, and that could be time consuming. So it's very key, each time you're going to open up a company, make sure the objectives that are in that memorandum of understanding address the actual items that you want to trade to avoid pushbacks. You need a certificate of incorporation, you have to resolve to borrow, and the most definite, because we live in a world of the taxman, you'll need trading licenses from the local authority that will show that you're compliant. For the partnerships, almost the same. You need a partnerships deed, the certificate of registration, and the statement of particulars of the different members. For the sole proprietors, because a sole proprietor is almost the same as the business, the particulars, statement of particulars would be sufficient, plus the certificate of registration of your business name, but most importantly, the trading license. You cannot dodge dealing with it. And the story goes on for the cooperatives, the local governments, and the NGOs. All those requirements are things we can share with all of you. Once we're done with the registration and the legality, we look at the due diligence, where there are certain clauses that will be done. And after the due diligence, we have the application that is ready to be processed. Now, on the most important bit into the business that we're in is, does the entrepreneur have the cash that is going to pay back that loan? So it's very key that you must have a financial income analysis statement. It's not going to the auditor per se, But even when we sit down with you, we have trained our loan officers to do financial statements with the different entrepreneurs. So up to a limit of about 100 million, we can sit once you have records. The magic word is record keeping. You must make sure the records are clear, so that we look out for the revenues and the cost structures, pull out items that are eating up your money in the costs. At the end of the day, we need to pull out profitability. However, profitability in itself doesn't pay alone, so we look out for cash in the business as opposed to profitability, because it could be hiding under stock or the debtors. And most importantly, we look at your debt service ratio. Here we compare the loans you have in the bank and those that are out there, and we see whether you will be left with free cash flow that can comfortably pay that facility. And the financial position, ladies and gentlemen, we look out for liquidity as a bank. So your business must be liquid. Does that mean a startup will not take up a facility? It's an issue of discussion. For as long as we can look at the projections from the startup project that has come forth, we should be able to match a proposal that can fit within your requirements. Most important, entrepreneurs, make sure money management and markets is at the forefront of whatever you're doing. Many times there is a lot of diversion of funds from your businesses to other enterprises, which is not a problem. But when you divert both the loan proceeds or money from business A into business B, it's very hard for you to know which business is now becoming a cash cow or the one that is eating from the available business. The management structure, it has been proven that the biggest cause of default and the collapse and distress in businesses is the management of the business. So we do go through the management experience and the steps of business continuity that have been put in place. Marketplace, that's a given. Without market, then we don't have something that is going to sell out there. Finally, the collateral requirements. I use collateral as the last thing because we don't look at collateral as our first item. It is something that should come as a motivation, just in case the person doesn't pay. What else do we have? As per IFRS 9 and regulation, we're required to stake a set of collateral. Here we do accept secured collateral, which would be in terms of land titles, logbooks, equitable mortgages, like sales agreements between party A and party B for a property that you acquired, guarantors, chattels, and fixed deposits. But all these collaterals shall be valued. We have a threshold internally where we can value by the internal team, but when that threshold is exceeded, the valuation will be done by an appointed expert valuer. Once these items are in place, entrepreneurs, we should be ready to do a proposal that most definitely will be selling. But always remember, deposits are one of the most important things that you're going to be required to bring. And it's not just deposits with us, but deposits out there. But even if you have mobile money, you can bring a statement of mobile money. It's called alternative data. Mobile money statements can be used to show the deposit patterns of your business. And next slide, Letitia. And finally, for my presentation is how we're going to do things differently. And this, I'm throwing it back to you, the entrepreneurs and the bank. This is what the challenges we all know in Uganda. There's been restriction on almost everything, markets, movement, business. They are very strict SOPs. That means the costs of doing business at your different areas are going to shoot up, because you must make sure people are sanitized and there is the wearing of masks, the social distancing. All these are going to have a very big toll, take a toll on our businesses. And so we need to prepare that for this year, our strategy as a business people, we must survive. Then the aggressive growth can be looked out for next year and the years that follow. We've seen low purchasing power, high unemployment. Every day, employers can no longer meet their costs, so they are forced to lay off their good staff. And this has caused financial distress, where in the market currently, almost 80% of customers are unable to pay their facilities, not because they are in default, but the measures to restrict the spread of COVID have taken a toll on their business lines. So what interventions we've done as a bank, we have existing clients where we're doing restructures and reschedules. But for those customers who come back and are willing to take up extra capital to resuscitate the businesses, we're going ahead to refinance. So if you had $10,000 and you're stuck at 8,000, but you're sure with another $2,000, it would help to save the 8,000, and most importantly, help you to run your businesses. It's a thought process we have. We can always sit with the customer and we do refinancing packages. Restructuring is not a permanent solution to you as an entrepreneur, because at the back end, it keeps accruing interest, and so you're delaying a payment to the future. So if we have an option between a restructure and a refinance, for as long as the business is speaking, I do implore you, think of a refinance to resuscitate the business. For the new clients, we are doing process re-engineering. We've already digitized most of our services. We are onboarding all the customers that we have onto the digital platform so that they can have very minimal contact with the branches, minimal contact with money. We're encouraging use of mobile money to avoid spread of the virus through notes. And we've gone into new markets, specifically into the refugee space. We've partnered with the Office of the Prime Minister to venture into the refugees, plus the up north. It's been an area that has typically remained virgin, especially for agriculture. So we're penetrating the northern areas of Kitgum, Pader, Agago, and Lamour. What we do, we don't leave our customers, and one of the ways this webinar shows that we do financial literacy for our entrepreneurs and our clients. So on a weekly basis, we meet our customers peer-to-peer, or we do webinars to make sure we keep on the same page on training, coaching, and most importantly, how we can all do things differently. What's our expectation? We think once we, together with entrepreneurs, keep up to the new innovative ways, especially in e-commerce and doing things into the digital space, we should have business resilience. A lot of automation is coming. So my dear entrepreneurs, if you've been a brick and mortar, we need to wake up and quickly evolve into the automation of some of the businesses we're doing. And most importantly, we should see improved customer retention for you, the entrepreneurs, and for us, the bank, is to make sure our customers are happy and satisfied. With that, Letitia, allow me to stop here and welcome some questions.
Excellent. Thank you so much, Amos, for this great presentation. And in addition to that, I'm very happy that that Opportunity Bank is giving 1 to 2% per month for loans for our SheTrades customers. In addition to that, I just would like to, before we head to the questions and answers, and let everyone know that for those who are interested in Opportunity Bank's offerings, there will be a polling system at the end of the webinar for you to tell us whether you're interested or not. We will then send out the application form, and this will then follow a coaching session. So if you are interested in Opportunity Bank and they also review your profile, you have the opportunity of getting 2 coaching sessions for free. So please do let us know at the end of the webinar whether you're interested or not, and we will be following up with you. So please do pay attention to your emails. If you do have any questions for Amos or SheTrades Invest, please you can please use the chat box. If I think we're also quite flexible you can also unmute yourself and engage with us. So thank you. Amos, while we wait for the questions to come in, would you like to just tell us about the two customers that we've shared with you and who have received microfinancing?
Okay, thank you very much, Letitia. Again, we thank you for sharing with us a list of entrepreneurs. So far, we've served two customers. One is in agriculture, in agri-business, and it's in rice processing. And in the far western side of the country, it's a deal that we're very proud of because it's been an area outside our usual niche. It's about 80 to 100 kilometers from our branch to the location. But we reached out to the customer and we introduced ourselves, how we got to get them, and we pitched the product that we thought would suit her. So the purpose was to set up the rice plant, which I have to proudly speak that was achieved. Unfortunately, because of COVID and recently there were floods in that area, somehow that has had a toll on the business. But we have a proud customer and we're proud of that introduction. The second is in a business of e-commerce and to sell of clothes, who also through ITC SheTrades were able to reach out to, and the facility was released to help into working capital.
Perfect, thank you. We have Miss Margaret. Miss Margaret, please, you can unmute yourself and ask the question, or you could also write in the chat box.
Yes, hello, can you hear me?
Perfectly, yes.
Yeah, thank you so much for the presentation. Unfortunately, I find you towards the end, so I might ask a question which has been covered already. At what stage do you give loans to people in agriculture?
Thank you very much, Margaret. In the agriculture space, we lend along all the value chains, from production, processing, marketing, post-harvest handling, up to consumption. So we're open. And if you walk out there, we want to be known as as a bank that looks out for the smallholder farmer at the origin of production. That's an area most banks keep shunning, but that's why we've dipped our fingers.
Okay, thank you so much.
You're welcome.
We also have Miss Victoria. She says that she has two questions. Miss Victoria, please, you can, the first question, okay, she's writing this down, is, does Opportunity Bank do asset financing?
Thank you very much, Victoria. Yes, we do offer asset financing and the development loans to acquire properties, we do. And the most important bit is that very asset becomes the collateral for the loan.
Excellent. And then while we wait for the second question from Ms. Victoria, we have Ms. Evelyn. She's asking, does the bank offer development loans like if she wants to purchase land and build shops for expansion?
Yes, we do offer development loans, but the challenge will be development or mortgage. If the period is way beyond 10 years, then that is a facility will not do. So if the period is between that period, yes, we are happy to do it.
Okay.
All right, and then we have Ms. Rita, would you like to say something? Or,
yes, please. Thank you. My name is Rita Amolo, and I have a question about the grassroots smallholder farmers that Amos just talked about. Do you have registered farmers with you, such as farmer groups, that a service provider like me doing modern agriculture solutions and value addition products would tap into for continued business? Thank you.
Thank you very much, Rita. Yes, we do have organized farmer groups, And I did mention that our appetite for up north has precipitated this very niche, because we have very organized farmer groups, close to 2,000 in the north, that we can link up with the service providers.
All right.
And maybe to clarify, we do, under agriculture, we do have an open or closed model that can loop in all the different service providers, or we can have an open model that can let the client pick the money and go and spend to whichever input supplier they want.
All right. Before we head on to Ms. Victoria's second question, Evelyn, is there anything else you want to say? I saw that you had your...
Yes.
Yeah, okay, go on.
Yes, I wanted to ask, thank you for the presentation. It was amazing. But I wanted to ask on my question of development loan, I wanted to find out, for example, we are into a process of expansion, and we're looking for a facility that can help us purchase land and be able to build a workshop for that expansion. So my question is that, does the bank offer that? For example, the facility, like you said, the land then becomes the collateral, but then the loan I want is not only for the land, but also for the building of the workshop. Does the bank offer that?
Absolutely, yes. We do offer that. Remember, in my presentation, I did mention that it's the cash flow. For as long as we map the cash flow and it can comfortably pay for both purposes, 100%, we'll do the deal.
Okay, and how long does that take? Those loans are kind of staggered for what kind of a period?
Those are the ones I did mention. They would range between 5 to 10 years because of the cash flows that are in between. And some of them, because they may need grace periods, yes, those are discussions we can have.
Okay, all right, thank you.
You're most welcome.
Thank you, Evelyn. Okay, so I'm just going to point out the questions where they're coming from. We're going to have a question from Ms. Victoria, from Ms. Margaret, and also from, there was another question from Ms.
Letitia, there was a hand from Josonia.
Yes, from Josonia. I'm going to ask her. So those are the 3 questions that are going to be coming up. So the second question from Ms. Victoria is the following. Is it possible to get a refinancing facility from Opportunity Bank as she's finishing her loan in another bank?
Yes, Victoria, we would welcome discussions. We do. One thing, maybe because of the time I didn't mention, we do buy-offs. So you have a facility somewhere else and you want to move that whole deal over, we can do that. Or you have a facility in Bank A, but you want to take another facility with us. We also entertain that kind of arrangement. So we're open.
All right. And then we have Ms. Margaret who's asking, if she's intending to start an integrated agriculture enterprise, what's the minimum amount she could borrow?
Thank you very much, Margaret. Our smallest loan, again, like I did share, we're a microfinance commercial bank. Our smallest loan is 100,000 Uganda shillings, and the largest is 3.6 billion Uganda shillings.
Excellent. If you have more questions, please feel free to ask. We have another 5 minutes, and then from there we can wrap up and have our final words. Miss Jusna, I think she's left. She had a question, but okay. That is absolutely fine. So in this case, if you are interested to explore options with Opportunity Bank Uganda, we will be sending an email. Please respond to that email, and we will then we'll be organizing coaching sessions for you to go in depth with the requirements and the documentations that are needed for you to get the financing. Okay, I think that would be it. No more questions are coming in. You have time to write down your questions, or also feel free to unmute yourself. All right, perfect. Amos, thank you so much for this great presentation. Do you have any final words?
Thank you, Letitia, and to the entrepreneurs. Yes, I do welcome all of you. We could have more detailed engagements on some personal issues you may want that I couldn't bring onto the presentation, but we do have a wide range of services that I think we can do together.
Perfect. Thank you so much, Amos. Everyone, thank you so much for your time and joining us to have coffee with Opportunity Bank Uganda. We will be having more webinar series of these kinds, so please do pay attention to our SheTrades Facebook page, Twitter, and our emails that you will be receiving. In that case, please also fill out the polling that we have just, I think if I'm not mistaken, 3 questions, and that will also give us some feedback about the webinar. To everyone, thank you for joining us and enjoy the rest of your day. Goodbye.
Bye.